So so far we've talked about what's coming down in the next few years. So let's talk about so far because the interest rate spike has already happened for the most part.
Yep.
Hopefully we're done with the interest rate spike. So how specifically have rising interest rates affected multifamily housing so far? Because people like me, we see how it's affecting residential real estate. You know, it's a lot of would-be home sellers are staying on the sidelines, for example. A lot of buyers are getting priced out of the market, things like that. So what are we seeing in multifamily? Is it the same thing?
Uh, so let me a couple things. First of all, I think it's really important, as you point out, Matt, to realize that whether the Fed does another interest rate hike or two more interest rate hikes, the worst is clearly behind us. Okay, so we've already raised 500 basis points. If it ends up being 525 or 550 basis points, 90% of the raise is behind us. Okay, so that's good in the sense that for commercial real estate and transaction volumes, you need rate stabilization to then allow cap rates to adjust to where rates are. And then you get transaction volume happening again. But when there's a disparity, if you will, between what the cost of capital is and where valuations are, that's when the market freezes for people to say, well, I don't know what my financing cost is going to be, and I don't really know what value is, so I can't transact. So one of the things that's important is to get to that rate stabilization so cap rates can adjust and then you can start getting deal flow again. As it relates to what your comment as on single family versus multifamily, there are a couple things to keep in mind. Somewhere between 40 and 50% of homeowners in the United States of America locked in a very cheap 30-year fixed rate mortgage in 2021 and 2022. So the numbers are 40 to 50% of single family homeowners have a single family mortgage of between 3 and 4% as far as the coupon rate that they've locked in for 30 years. They have absolutely no problem with that. There's no default risk with those loans. And those people are benefiting from an extra on a medium home price. They're benefiting from somewhere between $5,000 and $7,000 a year that they typically would have had to pay for their mortgage that they can put in their back pocket. That's sending them to Disney World. That's buying to go back to a movie that you and I probably remember, Trading Places, where they talk about the G.I. Joe, buying the G.I. Joe with the Kung Fu grip. I'm probably dating myself a little bit on that one, Matt. Anyway, that extra cash flow makes it so that those people don't want to sell those homes. Because if they sell the home, they've got to go put a new mortgage on it at today's rates. So that inventory of single family homes isn't coming on the market, which means that really the only homes that an individual can go buy are new homes coming on being built by Lennar and the other big single family home builders. In Lennar's last quarter, Matt, their average home price was $456,000. That is not affordable to most renters. So what it means is that the cost of single family housing is staying high, and people who typically would graduate, if you will, from being in a rental property to being in a single family home can't make the jump, which means that they are going to remain renters. And so as a result of that, given the price dynamics right now, what it means is that typical churn that you would get from people who say, hey, I just got married, I've been living in an apartment, I want to move out to a detached single family home and start a family, aren't able to make that jump right now, given the price disparity between renting and buying. And there are many people, including us, who think that that higher cost of entry into single family housing stays that way for quite some time, which means that multifamily stays well occupied, which means that today we're seeing rents across the country are pretty much flat. There's some submarkets where rents are still growing, some that have negative rent growth on them. But basically across the country right now in Q3 of 2023, rents in multifamily are flat. A year ago were going up at exorbitant rates. Right now they're flat. Many people are saying we'll get rent growth back into the multifamily sector in 24 and 25 as you don't have people moving into single family because of a lack of supply and the cost of entry. And therefore, you've got more demand for the product than you actually have product. Therefore, rents start to move again.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.